over the couple of days that we've seen sharp cuts for the markets. You've seen HDFC Bank drop about 10% or thereabouts, a little more than that. What are the factors? Of course, we've discussed that in detail. The question or not is whether or not we see a little bit of respite from that selling. If the ADR is anything to go by, Sajeet, and I understand there's a very small amount that it represents, but if the ADR is anything to go by, that respite seems to be coming in today. Can that conclusion be drawn?
Yes and no. The reason being, ADRs just account for 13.5% of HDFC's equity. The liquidity is slightly lower there, and what we saw yesterday was that ADR closing at 1.5% higher there. So yes, the gruesome selling which was coming in HDFC Bank ADR has come down.
Yes.
But is the selling over? The answer is no, because HDFC Bank continues to be in the model portfolios of most of the FIs.
Yeah.
As part of the MSCI holdings as well, HDFC Bank is there in most of the portfolios of global companies, because financials, Indian financials, it was a proxy for Indian financials in that way. So there was HDFC in that. So there is going to be selling. I would say it's not selling, but it would be a churn where it may move from one hand to another hand. And that volume will be reflected for next couple of days till that stabilizes. Remember, the price of HDFC in the local market is almost at October levels, October 26th level, when we saw the index falling because of the US yield hitting 95%.
And at that time as well, you saw HDFC, which led the declines. It contributed to most of the decline for the benchmark.
So, where does the first selling come in? The most liquid stocks can be sold, right? So, and HDFC has a good liquidity. Means if you look at the liquidity parameter, it's almost 100% because it doesn't have a promoter. So, the liquidity comes from the most, and in this case, the most liquid stock is under pressure. So, you're going to see that kind of
I think that's important to also point out before you go to the next point, because that will lead the context, I think, is the holding, right? So, Samina was speaking about in trade setup, but I think it's important to elucidate that further or to repeat that. So half of the holding is FIIs.
So you have to break up the FIIs into multiple buckets, right? Sure. There are exchange traded funds who are following a Nifty or a Sensex strategy. Yeah. So they have to keep HDFC. They cannot sell. Right. So that's around 12% of the foreign funds which we are talking about. Then you have domestic funds which have around 9 to 10, 11%. Most of the funds have financial as 30% holdings. Sure. And within that you have HDFC where it would be around 8 to 10%. They don't go around about 10%. They can't. So the room for domestic FIs to absorb that liquidity from FIs is limited. Yeah. Okay, so that is one thing to watch out for. So where does the buying come from? It would be from other FIs who would like to get an exposure to a bank like HDFC Bank. Now, everyone knows that it's going to be 3 to 4 quarters of pain, because there is a credit growth versus deposit growth was argument which is going on, and it's going to play out across the frontline banks, including ICICI Bank, Axis Bank, Kotak, everyone. So if you have enough liquidity or cash equity in your books, it's good, because then you are able to manage that for the next 3 to 4 quarters. But coming back to an HDFC Bank, there is going to be that pressure, and you're getting it at 10% cheaper. So you may, if you were underweight financials or HDFC, you may increase it a little bit. But that's not going to happen, because there is going to be a constant pressure, because it's more than half of its equity is held by foreign investors. Yeah. So while even if you remove the exchange traded funds, there is an active investor base which is going to churn and bring down the portfolio allocation to HDFC Bank, and there will be some who will be adding. So if you look at the delivery statistics yesterday, it's even more than what we saw on the first day when the first fall happened. Yesterday we saw the cut of 2.5, 3% in HDFC. The day before it was 8.5%. Yeah. Delivery yesterday was 69% on NSE. Total amount of value of delivery was 8,300 crores. Yeah. The stock is at October 26th low, and what we saw was that many of the FI selling which have come in, which I'll come to subsequently, the FI selling which we are seeing was picked up by other FIs. So domestic ability to absorb HDFC Bank is limited today as we speak today, unless you're going to take a broad bet saying that this is the time I'm going to hold for next four years, because HDFC had said in the past that they want to double their book every 4 years.
Sure. So what was the point that you were making? So you made the point on FIs, but my point here is mitigation of selling, and I think this is ultimately the crux of this conversation. At least for the short term, could we see a little bit of dust settling? The reason being that over the course of these 2 days, you would have seen even those that have been overweight on HDFC Bank see that 10% or 9 to 10% number shrink a little bit in terms of that overall portfolio, which allows them the ability, if at all, to nibble in if they find that there is an attractive. They were convinced about HDFC Bank 2 days back or 3 days back. Would that have materially changed? And from that perspective, there will be more buyers at this price, as presumably, than there were 2 days back.
So the question is there an alternative to HDFC Bank? There are multiple.
Sure.
Okay. The question, if the answer, if the next question is, should I add HDFC Bank? Maybe not. That's a fund manager would say that it's already dented my portfolio because I have 10% of HDFC Bank.
Yeah.
I don't want to add it just because on percentage terms it has come from 10% to 8%.
Fair point.
Simple as that. Look at the FPIs which is doing. The kind of gross selling which we are seeing in the last 2 days is huge.
50,000 crores.
52,000 crores of gross selling by FPIs. Now I've been looking at last 1.5 years of numbers of gross sales. Once or twice we have seen that kind of sales, but that's because of the block deals which are happening. So you have a buyer and a seller on both sides, and so you have that kind of 52,000 crores of gross sales in a day. Is a huge amount. Over 2 days, is a huge amount.
There were a few block deals, but were there any significant?
Not much. Not much to talk about, right? So the buy side which is coming in because of the block deals which are there, but sell is 52,000, and the fact that in the last 2 days we have seen FPIs net selling 20,000 odd crores. Yeah. So a large chunk of that is HDFC Bank and some of the financials, because we have seen high delivery happening in ICICI Bank, in Axis Bank, and the market expects that the same is going to be the issue with these two large banks as well going forward. So there is going to be selling. Okay, will the stock correct further? Marginally, maybe, but it's not going to. The churn will continue for some more days. You'll see these numbers coming in, and by the end of this month, we'll know that we get that breakup of sector-wise how FPIs are doing. I'm sure the second half of January will have a big negative number coming in for that.
Interesting. All right. So may not be something that you'll have to wait too long to find out the outcome of. You'll find out as soon as market starts, and I'm sure that we'll be talking about this for some time to come as well.